Hello, this is Graham Bivvy here. I just wanted to give you a quick update why this week is make your mind up time for the world stock markets, especially the leader, the US stock market. I just want to show you where we are with the certain indices in the US. I'm going to start with the Standard & Poor's 500 here. Standard & Poor's 500, I'm pointing the arrow. And this is what's happened over the last just over a year. Since November 2012, this bottom, we were in this nice uptrend. We had a bit of a correction from here, from May to June, and then early July we broke out to the upside, and then we tested back here to support, and then we were gyrating for quite a few months through this flag, and then we broke out to the upside. Now, what's happened here is there was a support level here at 1825 which we broke, and we also broke straight through the 1800. Now we could be at a support level here because it's supported here and it was resistance here. So what I really need to see now, is the market going to break below that point, or is it going to break above that point? So if we zoom in a bit closer, you'll see here we are, we're in this range now, and we ended almost in the middle of the range. We broke through that stop, then we were down and up towards the end of the day. Next day looked very good because we took off and we ended on a high. But then the next day we ended on a low, then we ended on a high, then we've ended in the middle. So right now it's too early to say which way the market's going. It's not normally good news if you're below this moving average, so that may give some negativity to the market. Now the Nasdaq, which in some respects has been leading the market, this is the low of last June. We were following this uptrend. If you take this as being a support from September, the support line was here, which we've broken below. We've broken below this line here, which was support. But now we're at this support line, and you could argue, if I put this resistance point on, this was resistance here and it's support here. So this market looks a bit better. You know, we did appear to be breaking down here, and then we broke back above 4.1 level, and then we're at about 4.103. So we're kind of marginal. This looks a bit more favorable than the Nasdaq. Here is the Dow Jones Industrial. Again, you can see clearly the gyrations that have happened. So April, significant move up over 1,000 points, then back down again, then up again, then down again, then up again, then down again, then up again. And then normally when you get a breakout like this, you get a test of support before you take off. And this normally means a lot of movement in this direction. But here we had lower tops, and eventually we broke below 16,250. The 1600 level couldn't hold, which would have been support, and 5,750 is the next support level, and we're just below that at 15,698. So it's very important this week. This is a Russell 2000, which is a smaller companies index, and from April of last year, this has been the trend line. That's the supply and demand line, if you like. If you keep going up at that same gradient, it means the amount of demand for the stocks in the Russell 2000 or the index is constant. We're going up at the same rate, the same speed. We again broke below 1150, which was short-term support. Now this top here and this area here should provide support right where this circle is, and we're right on that support level. In fact, I think 1125 is a support level, and we're just above it. So right now the jury's out which way we're going. I wouldn't like to hazard a guess because each day seems to paint a different picture, but I'm pretty reluctant to take up new positions at this point in time. We've had a number of sells over the last week or so, raised a lot of cash, but safety first is required. But I do feel confident, even if we are going down lower, at some stage we will bottom out, and then the markets will be going higher. So this is Graham Bivvy. Just wanted to give you a quick update on the 3rd of February 2014, first day into the year of the horse, and I'll be getting back to you later this week as markets developments unravel. Thank you very much, and I wish you a very prosperous year of the horse.